Hi, everyone. This is Rob Roy, and welcome to the Elliott Wave Options U.S. Market Update. As we do each and every week, we show you on the screen the stocks that will be featured in this recording. If there's a particular stock you're interested in, you go directly to it using the chapters feature in this recording. All right, let's take a look at the chart of the markets. And as you can see by the chart of the S&P today, we hit it. On the high of the day, we hit that AI target on the SPY that we've been talking about for, going all the way back to June. You can see when that target came out, a 62% chance that we're going to hit 652, and we did today. Some of you ask, all right, what happens after we hit 652? Where can we go from there? Well, I wanted to draw in this zigzag pattern. If you've been watching, you know that I'm a big fan of zigzags. So you can see this zigzag right here, which is giving a 100% extension up in the 660 level or so. That would be the next potential target, and then we'll have to see what happens from there. The B wave right at a 50% correction, so you expect 100% extension, so that's likely where we can go. And while I was talking about the comments that y'all have made on the videos each and every week, been talking about how we do a giveaway where we give away one of our free level 3 subscriptions, our 3 primary subscriptions at ewotrader.com. Well, I've got a very special opportunity for you this week as we celebrate reaching 50,000 subscribers. Thank you so much for hitting that subscribe button so you're notified and every time one of these videos is posted. But the special opportunity I have is something that I've never talked about before, and it's called TopShot. Some of you may be aware that I had a previous career as a golf professional, hence the name TopShot. But basically what it is I cherry pick the best of not just those 3 primary portfolios that I talk about, but there's a 4th one called the speculative portfolio. And that's something that if I notice something in the markets, I've been doing this for over 28 years, but it doesn't fall within the specific rules of those other 3 portfolios, it goes in the speculative portfolio. So basically, it's the top trade of the week out of those 4 portfolios, and you can take advantage of it for just $99 a year, as you see on your screen. You can go to the link that's at the bottom of the screen, take advantage of it. When we do the giveaway, only one person can win. Everyone can win on this. Basically, it's less than what you would expect to make on one winning trade, and it pays for the entire subscription. So again, it's the top pick out of those portfolios each and every week. So take advantage of it. I think you'll be pretty excited about the results, and you can see them all on the website. All right, let's get back to the markets. So that is where the expectation is on a C wave extension in the zigzag. Let's go right to the VIX, talk about that. We're still hovering around that 15 level on the VIX, but you can see this descending triangle that continues to form on the VIX as each one of these spikes higher is a little bit lower. So just the pattern on the upper trend line of lower highs and then the support right around 15. Remember that just because it's a descending triangle doesn't necessarily mean we're going to break to the downside. Any triangle can break either direction, whether it's descending, symmetrical, or ascending. They can all break any direction. So pretty solid support there at 15. We'll see. Maybe we break down if we continue to move higher in the markets, or maybe we get some sort of a surprise move back to the upside. That Fed meeting is coming around on September 17th. We'll talk more about that in a few minutes. But let's go ahead and take a look at TLT, and I'll talk more about that situation with the bond market. Look at that chart of TLT. As a reminder, for those of you that may be viewing for the first time, TLT is prices on the 20-year. So prices and yields move inversely. So if prices are going up, yields and rates are going down. So we had a big move to the upside in prices today, which means yields on the 20-year went down. Now let's take a look at the chart of the TNX, because I know a lot of you like to look at the 10-year. And as a reminder, TNX does show rates. So where TLT shows prices on the 20-year, TNX shows rates on the 10-year, and rates went down, which means that they went down across the curve, not just on the longer end or the shorter end of the curve, which is what we've been used to, all across the curve. And that's because we had the non-farm payrolls report that came out today that was really disappointing as far as the number of new jobs that were created. In fact, they revised the June number to a negative. So we actually lost jobs in June, but a very unexpected increase of only 22,000 jobs in August. And that pretty much cements the September rate cut. So if the markets are anticipating this rate cut, and now there's whispers, it emerged today, and this followed the ADP report as well as the JOLTS reports earlier in the week, which both showed that we were going to have a weak jobs market, or the jobs market is weakening. If we take a look at where we are on the macro side, and remember that this macro chart is created by the same people that give us the Hub software, HUBB.com. If you haven't gotten a copy of it, go get it. You can get it for free. Get the charts for free. Get Alleyway for free. There is an opportunity for you to subscribe to the AI signals if you'd like, or you can subscribe to TopShot and get the best pick of the AI signals. So you got a couple opportunities there to take advantage of AI, and the Hub organization's been doing it since 2020. TopShot's very new, though, but it has a great track record from what we've done over the past several months. So go take a look at it. But you can see when you're looking at this chart that just to summarize, the green line is still moving up, but notice the tick down on the red line, which is contraction. So we are still expanding in the economy. Even though the jobs market is weakening, the economy is still saying okay. And then if we're going to get a 25 or again, the whisper number of potentially a 50%, 50 basis point, I should say, rate cut in September. I don't think that's going to happen. I still think it's going to be 25 basis points. But if you have a decent economy and you're going to move into an easing monetary policy, we have the potential of the markets moving higher. And that could be the catalyst that brings the SPY back up to that C wave extension that I showed you before. Up around the 660 level or so. All right, so let's take a look at some of the rest of the U.S. markets. We'll look at the Dow. A lot of these charts are going to look kind of similar with the upward days, but finishing off the highs of the day. But we are moving into a weekend, so perhaps that plays into the fact that there was some selling on the highs. But notice that the wave 5 here on the DIA is right in the middle of the tap box. There was some movement. We'll talk about Broadcom a little bit later on when we get to the stocks of interest. But there was a little bit of a renewed bid in some of the big tech stuff today, and maybe some money that had rotated into the Dow may come back out, or maybe it won't be quite as volatile. You can see we've kind of gone nowhere for the last couple of weeks in the Dow. But once again, we are in that tap box. So we're in the area of where the projection of the wave 5 would go. It has been colored purple, so the algorithm at least thinks that that wave 5 may be pretty close to completion. As we continue looking at the U.S. markets, we'll go to the Qs, and this is where you can see what I was talking about, where we've had a little bit of a renewed interest since those poor job numbers came out, starting with the JOLTS report on Wednesday, the ADP report yesterday, and then the big government non-farm payrolls report today. But once again, we opened on the high and closed off the high of the day. Was that just position squaring going into the weekend, or was that just selling into strength? We'll find out at the beginning of next week, but we bounced right off the 50-day moving average. I've talked about these triangles before. They're in the volatility portfolio, which is one of the portfolios included in that TopShot that I was telling you about a little bit earlier. Triangles are how I kind of made my claim to fame in the world of options, creating a very unique way of putting on strangles to where you get the best delta gamma relationship, so that when you get a breakout, the option, if you get a breakout, makes money as fast as mathematically possible, because it's all math with all the Greeks. But I've talked about how there's one of three ways triangles can break out. They break out and take off and run. They break out and test the breakout and then continue in that direction. Or you get a false breakout, which is what it looks like we have here on the Qs, at least for now. So we broke to the downside. We held the 50-day moving average on the low. And then on the previous days this week, we've continued to move back to the upside. So we'll be looking for follow through above the point of this triangle at the beginning of next week to see if the Qs can keep their bid. Notice that the wave 3 is still green, which means the algorithm is not sure that that wave 3 is done, meaning that there's a possibility that the wave 3 goes higher and that we do take out that high from earlier in August and see if the Qs can mount a continued move to the upside. If we take a look at the IWM, this is one that has really been surprising me, and maybe this is something that we should take a cue off of. Part of the surprise is the fact that it's been acting this way because it's known as the risk on, risk off type of a indicator in the markets. It's the small caps, it's higher beta, so a little bit more risk involved here. The part that's not surprising is the IWM is going in because it's also the most rate sensitive of all the different indices or markets in the big market as a whole, because they're smaller companies. They need to borrow money. So when money's cheaper, it makes it easier for them to borrow. They can borrow more money. They need to borrow to invest in their companies for growth. They don't have big war chests like Nvidia, Apple, some of those other companies that have tons of money in the bank. They need to go and borrow. Now, note that we did have a really classic Doji there on the IWM. So maybe the IWM needs to pause a little bit. And with those gaps that you saw on the bond chart, perhaps yields back up a little bit to start the week. Maybe we get a little bit of a retracement here. We'll wait and see what that Doji means at the beginning of next week. It's also in this wave 5 tap box. And by the way, tap stands for time and price projection. So not only does it give you a price projection, but a rough time frame of when things could hit their targets. But maybe we get a little bit of a pause on the IWM. But gosh, going back to August, it's been a heck of a run as the IWM does look towards that easing monetary policy from the Federal Reserve. How much? We'll wait and see. September 17th is the next Fed meeting, and we'll be looking for not just what's expected there, because a rate cut is expected, but is the Fed going to give us any indication of whether or not we'll get another one by the end of the year? A lot of people think we'll get another cut in December. Do they give us any sort of a clue on that? That'll be things that we look at. If we take a look at the dollar with rates moving down, we did get a little bit of a tick down in the dollar, but we're still holding that lower trend line here. And as you know, if you've been watching over the weeks and months, I've called this channel here the Goldilocks channel, because the dollar staying down here is ideal for equity markets moving to the upside. We keep the dollar a little bit weaker without losing it altogether, and that helps companies that have international exposure from the exchange rate. Netflix has talked about how that was helpful for them, et cetera, and any company with international exposure benefits from that. But my question is, when we do get to the September 17th Fed meeting, and if they cut rates as expected, does that break that lower trend line? Do we start lower in the dollar? And I've talked about this. I'd be okay if the dollar came down a little bit. I'd really not like to see it break that wave 5 low from the beginning of July. I don't want to get to the point where we start having the whispers of our foreign countries going to start dumping our dollar because they don't want to take the losses. Is the dollar still the currency of last resort? All those little whisper things will come out if we see that dollar break down below that. It was kind of coming into play on the July low. So if we break that, you can imagine it would be even stronger. So staying in this Goldilocks scenario. But if the Fed cuts rates, perhaps we do continue to go down in the dollar. And that aspect of rates going down has certainly propelled GLD. You can see this. I've been showing this quite a bit during Trade Finder on Tuesdays. And by the way, if you haven't signed up for Trade Finder, you can do it with the link on your screen. We do it every Tuesday at 1 p.m. Eastern time. So it's during market hours. We look at the markets, we look for trade ideas, and we have a live Q&A. Fantastic community. They ask great questions. One of my favorite events to do each and every week is Trade Finder. Love to have you join us. Again, it's free. And so going back to the chart of GLD, I've been talking about this. We've had this triangle that formed for a very long time while the dollar has been consolidating. And then, boom, we get the big breakout. And this is what I was talking about in the volatility portfolio, these triangles. You see this big vertical move, and we did have an alert on this. We made a nice gain here on this vertical move to the upside. It got a little vertical. So we went ahead and closed it out because we were a little bit overbought short term here. But you can see the AI has given us a signal here that it thinks GLD goes a little bit higher. Well, we're already out. Maybe it does go to the upside, but we're not going to turn down that kind of a gain. And it's a little vertical for me, little vertical too fast. And that makes me nervous. But still, it was a really nice gain, like a 90% gain in the options. So we're going to take that every time, even if the AI is right and we go all the way up to the 337 level. But join us at Trade Finder if you want to talk about that. And I drew these areas here of potential targets. If we broke to the upside, we were looking around 330, which is where we went. So that's why we got out, even though we did move higher today. And if the GLD had broken to the downside, that was a lower target, and that comes from the width of the mouth of the triangle. That's how you project where it's going to go. Again, the AI is saying that we've got a 70% chance that we go higher. Maybe it'll be right. We'll wait and see. Then we look at silver, SLV. You would think that it's followed along with GLD, and it has. It broke to the upside. Not quite the same size triangle that was formed in GLD, but we've also got this really nice Elliott wave pattern. Even though we had this triangle here, you don't pick a direction with a triangle. Even Elliott himself said a triangle trumps everything. Even though we had a nice wave 5 to the upside with a triangle, you don't pick the upside as the directional move. You have to respect that a triangle can break either direction regardless of the Elliott wave pattern. But we came down here. We tested the 50-day moving average, also the level that the AI predicted way back in the beginning of June, right through here, where silver stayed for a month and a half before going up and forming that triangle. And then we got the breakout. And notice we've snuck into the bottom of the tap box here. So maybe it's a little bit of buy the rumor, sell the news on the metals as far as the rate cut coming and the dollar going lower. We'll see if there's any more staying power, how much further it can go on the metals. Let's go ahead and take a look at energy. We'll look at UNG, which is at least giving the opportunity of a little bit of a move. I've talked about this before, that I've had the opinion, just my opinion, that traveling over the summer, a lot of areas in the country were hotter than normal. They had much warmer than average temperatures over the summer months. And would that lead to a colder than expected winter? And you need to look at the Farmer's Almanac. And in our insiders meeting last night, one of our subscribers, and that's for subscribers only at evotrader.com, showed, they sent me the Farmer's Almanac, which is indeed forecasting a colder than expected winter across the United States. So maybe that plays out. Maybe that can be the key that puts a little bit of a bid. So far, there's a little one, not much. In UNG, I've talked about this. You can look at past recordings. It's a supply-demand thing. We are the Middle East in the terms of natural gas in the U.S. here. And I'm not necessarily looking for any sort of a big rally in natural gas, just a little bit of a technically oversold bounce. And that's why I've drawn this line here around 15. So again, not looking for any sort of a big upward move, just a little bit of a bounce. We're going to have to fight that 50-day moving average here if UNG is going to continue higher. We do have an alert on that in the speculative portfolio, one of those 4 that I mentioned that are included in the TopShot each and every week. And so far, so good on that. And we'll see if it can continue to the upside. So again, I'm not trying to mess with the supply-demand curve, just simply the fact that at some point in time, when you've had a move like this, sellers get exhausted. And there are not many sellers left. And then it doesn't take many buyers to generate a gain. That's all we're looking for there. Now let's take a look at oil, looking at USO. A little bit of a tick down today in oil. We do have a pretty nice triangle set up here in USO. One day means nothing. Remember, you have to have a follow-through or confirmation day, because you can have a false breakout, which we've shown you as an example on past charts, and maybe we move back up like we were looking at, I believe it was in the Qs. But there's something significant about to happen in USO. When we had the Israel-Iran conflict, OPEC came out and increased production. When we got another little bounce here, which looked like maybe oil was going to take off, they increased production again. OPEC, in my opinion, wants to keep the oil price in this level here, where it is, slightly elevated, but not to the point where it gets too high that it creates a whole new crop of people that are investing in electric vehicles. So we're used to the prices we're paying at the pump now. It is elevated, so OPEC's making some money. They want to keep it here. They don't want to see it drop too much either, but that is a possibility with this move down today. But once again, we have to see what happens on Monday. Do we get follow through? If so, maybe USO starts to move down towards 60. Then we could have OPEC doing a reversal, and maybe they go into a production cut rather than an increase that they've been doing. But they are trying to manage the supply-demand curve, and they're trying that pretty significantly. Let's go into the crypto space. We look at BITB, one of the ETFs for Bitcoin. I know a lot of you like IBIT. I've talked about this numerous times. Both of them are good ETFs. They have good leverage in the options with great liquidity. The IBIT does offer weekly options if you want something really short term in the crypto space. BITB does not. But again, the options are very liquid in both. But we're still hovering around that 60 level. Really important on Bitcoin, at least from the BITB. If you want to see Bitcoin move higher, it's got to get some distance above 60. It traded above it today, but couldn't hold it. You can see we closed right on it, right at 60.71. But we need to see some follow through back to the upside if you expect Bitcoin to make a run. So we closed right on the 10-day moving average, below the 50-day moving average. But note that the 10, 30, and 50 are all converging right at that 60 spot. That's why it's so important there. And then as we look at ETHW, which is an ETF for Ethereum, and if Tom Lee's right, then this move is going to continue higher. I've drawn this stair step here, just an old-fashioned pattern here. We have a vertical move, consolidation, vertical move, consolidation, same thing here. And talk about consolidation, we've got a little bit of a triangle being formed here on the ETHW. So Ethereum is consolidating a bit here. It's going to make another run. Is it another vertical run up to the next rung on the stair step, or do we break back down and we'd be looking at a move possibly down to that 50-day moving average, or even all the way down to 25 on the ETHW if we were to get a downside breakout? But once again, it could go either way. So we're kind of at a very important point on both Bitcoin and Ethereum as far as where we may move to the short to intermediate term with what happens over the next few trading days. So keep an eye there. As we move to stocks of interest, looking at Tesla, another stock that a lot of people ask about during Trade Finder. The one person this week said they were itching to go long on Tesla, and when would be a good opportunity? Well, you can see this massive ascending triangle. Once again, any triangle can move either direction. So an ascending triangle doesn't mean an upward breakout any more than a descending triangle, as we showed on the VIX, means a downside breakout. They can go either way. And so my comments have been, well, we've tried this 350 level multiple times. My mentor, and that's always great to have somebody that's been around the markets for a while to help guide you. And I'd like to do that through TopShot if we can, in addition to these videos that we do each and every week. But he told me that the third time's the charm. That was one of his rules, that when you tested a support or resistance level on the third time, what happens after that is what is likely to happen over the short to intermediate term. So we're back up here. If we can continue higher, that would be a break here. And it means that Tesla is probably going up to 400. I think that could happen relatively quickly, but we closed right on 350. So doesn't count yet as a breakout. We need a little bit more, and then you could get that room to 400. And if we break 400, the next level of resistance is at 450. So Tesla's trying to break to the upside, but I think you need a tiny bit more patience and let it go ahead and make its move. Nvidia, that came out with its earnings, it had a solid earnings report. It did not include anything in China from the last quarter or in their forecast for the next quarter. They're waiting on some regulation stuff from the administration on what kind of chips they can sell to China. But we did break the 50-day moving average today, so we'll have to watch that on Monday as well. And note that the algorithm still has a wave 4 in green, meaning that it's still active and we could move lower. So we could get follow through to the downside on Monday. We'll just have to wait and see what happens there. But I think if the administration gives the green light to China or to Nvidia to sell chips in China, that could put a bid back under Nvidia. But until that's discerned and we know more about what's going to happen there, I think you're going to see a period of weakness here in Nvidia. Maybe not moving lower, but perhaps a little bit of a trading range. But we got to watch that break of the 50-day moving average. The previous 3 days, we kind of traded on it on the low, but then we broke it in today's trade. So we'll see how that plays out. On the opposite end of the coin, we had Broadcom, which came out, and the financial networks have been talking about this mysterious client they have that's worth about $10 billion of revenue. That was enough to give Broadcom a big spike higher, unlike what happened to Nvidia on its earnings report. But notice once again, we opened on the high of the day, closed near the low of the day. But going back to one of my rules, that was awfully separated from the 10-day moving average on the high. No security in any time frame gets too far from the 10-day moving average for long. And that was great separation there on the high. So that was a good point to get out. Now we'll see what happens with Broadcom. I think there'll be some backing and filling here. Let that 10-day moving average catch up. Sometimes the stock comes back down towards it. Sometimes it goes sideways and lets the 10-day moving average catch up. Other times it's a combination of the two. That's the backing and filling part of it, where you go a little lower, you go up, you can kind of in the end go sideways and give the 10-day moving average time to catch up. don't necessarily think that that gap is going to get filled right away. Someday it's likely to, but perhaps not anytime soon. At least the market was giving them the benefit of the doubt on that mysterious client. Looking at Amazon, which is just trending higher, nice and easy on its move to the upside. Wave 4 down here, 43%. Tested the 50-day moving average multiple times here. So we traded through it in early August, tested it again in mid-August, end of August, beginning of September, and now we're moving higher. So now we have to look at this area of resistance that happens to coincide with the wave 3 high. Can Amazon get above that? If it does, then I think we go up into the tap box here around 250, 260. We got to break this level just under 240 first. So nice move over the last couple of days, but doesn't mean anything yet until we break this resistance point. Google, who got a favorable rating, there's been this cloud hanging over Google's head for so long on whether or not the administration, the government was going to force them to break up, monopoly, et cetera, et cetera. You can look at all the news. You're probably familiar with it. And then they got a favorable ruling that they're not going to have to be broken up. And boom, that ignited Google off to the upside. But once again, kind of overbought here, a little too far, a little too fast. Some same backing and filling that I just talked about with Broadcom, I think is of the order of Google. But if you caught that move, congratulations. That was an unexpected news, but that had been hanging over Google's head for quite some time. Maybe that can reignite a higher move on Google, but maybe just not immediately as we correct that overbought condition from the 10-day moving average. Apple, people are talking about Apple again. Ever since Tim Cook went and met with President Trump, and they created the deal where Apple was going to invest another $100 billion into U.S.-based companies, and the administration is not going to make them move their production from India back to the U.S. That created this initial move here in this zigzag pattern that I've drawn. But note that the B wave was right at the 38.2% fib level, which first point of expected target on the C wave is 61.8% extension. Well, that's where we are today. A little bit of a doji there as well. So maybe we get a little bit of a pause here on the chart of Apple as we move into the beginning of the week. But that wave 3 is still green. And note that the AI, it's a toss of a coin. It's giving it a 50% chance that we hit the 250 level on Apple. So, flip a coin and take your shot there. A little bit overbought, Doji. So maybe a little bit of pause there on Apple. And to finish up this week, Netflix. So if we take a look at Netflix, we have made a nice move back to the upside here on Netflix. And here's one of those triangles here, very expensive triangle. So you really can't do a strangle on that. You just watch it and try to trade it directionally. But when you're looking at trading Netflix directionally, it's prudent to let it break this trend line here. It's just under where the wave 3 is, a little bit of resistance there. Let's just be a little patient, let it break that, and then we have plenty of room for it to run up to a potential wave 5 target around the 1500 level. But first things first, we got to get above this point here. So perhaps we're making an upside breakout on Netflix. We'll have to wait and see. Once again, thank you so much for your support over the months and years. Please hit the like button, hit subscribe if you haven't already. It's free. All it does is allow you to get a notification every time one of these videos is posted, and take advantage of that TopShot. Very special offer. We're in celebration here of that 50,000 mark. And once again, thank you so much. Have a great weekend. Look forward to talking again soon. Take care, everybody. If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.